Meanwhile, we told you about up until now oil prices tumbling along, and a lot of that builds on the idea that maybe the demand isn't there from the world, particularly from Asia, particularly from China. So if it's indicative of a slowdown in China, one of the mightiest economies on earth, and that economy is sputtering, then what? Market watchers Catherine Rooney-Vera and Scott Martin. Scott, obviously, it would hasten the need for a trade deal, but it could also mean the Chinese are already on the ropes, and it doesn't matter at this point. What do you think?
Yeah, it looks like the evidence is starting to come to light, Neil, even though I'd tell you that it looks like China's been on the ropes now, at least kind of under the water, let's say, as far as some currents underlying things, for the last year or so, and maybe they've been able to mask those, and now it's coming out. Now, to Jeff's point about using oil as, say, the canary in the oil well, if I may, the last couple dollars, maybe $5, $10 in oil and crude, Neil, on this fall is probably due to more trade than anything. But yes, oil definitely coming off in price over the last couple months is a concern globally. There is a definite global slowdown or stagnation going on out there. But I do also believe that given that the trade deal may be back on based on the winds of trade we're hearing about today, could clear some things up and maybe get things a boost again, and that will help S&P stocks in the long run.
You know, Catherine, if you do buy the premise that at the very least the Chinese economy is slowing down, that could be a worry that has like a domino effect in a lot of places, couldn't it?
Neil, unequivocally, the Chinese economy has been slowing down, and it's been slowing down for the past 5 years. I mean, look at over the past decade, Neil, we saw growth in China maxed at 14%. Just 10 years ago, it was in double digits at 10%. I mean, there's two issues. One is structural, one is cyclical. China is in a structural slowdown and they're making a concerted effort to do so. That's a different topic, a different question. China is trying to become a first world country. It wants to be both a geopolitical and economic powerhouse, and it knows that to do that, Neil, it has to change its economic growth models from one based on government spending, roads to nowhere, ghost cities, and one based on exports and a devalued currency to one based on domestic demand. So this slowdown has been years in coming, and I don't think that's the real issue. I think the issue here is market sentiment is horrible, and what can trigger market sentiment back to the upside, which I think it should be, earnings are strong, economic growth is strong, is a trade deal November 30th, December 1st in Buenos Aires at the G20 between the U.S. and China.
Oh, I wouldn't hold my breath for that, but I could be wrong. Scott Martin, the stars would apparently align for something like that if the president and President Xi Jinping of China are coming together to meet. I mean, even the framework of a deal. But let's say they do strike one. I would imagine the markets would soar on that. I don't know how long, but what do you think?
I hope so, but I agree with Catherine's point, Neil. As I've kind of said the last few weeks, the market is off its medication, and nothing against anybody that takes medication, but the markets are definitely not feeling well,
on
and they're
medication,
anxious.
Of course,
That's true, sure. And there's some good medication and bad ones. Let's just keep it at that and keep it PG rated here. But the reality is this. The market is in a bad mood. Catherine's right, and it's very anxious. And even good news, Neil, as we've seen from some of these earnings reports, which haven't been that bad. Netflix all the way back in October, Adobe, some of these other names, that came out with good data, good numbers, they got smoked. So to me, the market actually needs time more than anything to get to some pricing levels that it's comfortable with, and then it can rally again.
Catherine, are you still leery then of these markets?
No, Neil, I think if China on November 30th, they're willing to cede on one of three things. One, allow joint ventures with U.S. companies in China. Two, open up the markets, to open up that very restrictive quota on car imports from the U.S. into China. Or three, do a legitimate crackdown on theft of intellectual property, which is something we've been battling in the U.S. with China for the past 2 decades. Since Bill Clinton, we've been complaining about this. Then I think we can make progress.
All right. Guys, I want to thank you both very, very much. Meanwhile,